Thanks, Melissa. Financial analyst Lance Roberts, who's on the radio this morning at KSEV, is taking some time off the air, off the radio, to be with us right now. And Lance, we want to ask you about this Band-Aid that's been put on the issue. It sounds like we're going to be going through this all again because they only extended action through January of next year. Are we going to be reliving all of this in a couple of months?
Yeah, unfortunately we are. I tell you, the sad news is about this is that, this was the moment for the Republicans to really make a stand, so to speak, and really make some changes, some reforms to spending and budget and potentially taxes. And they really let this slide through. There was no threat of a default, even though this was widely espoused in the media over generally, even from the White House itself. If we cross this line, we're going to default. But the markets are sitting at all-time highs. The markets were telling you there was no real threat of default, which is the case, and they really let an opportunity to make some real changes for the economy slip through their hands.
Well, Lance, let's talk about everybody's money. And first, you mentioned the stock market, which is soaring near all-time highs. It is down this morning, though, and it's interesting because it may not necessarily have anything to do with this debt ceiling deal, right? There are some corporate earnings that were released.
Yeah, absolutely. Again, the markets have been anticipating, the markets knew all along, actually, that this deal was never going to be a big issue, that it would eventually get raised and we would move on down the road. And so because of that, the Federal Reserve is still in, putting money into the markets. That liquidity has been driving stocks higher. This morning, Richard Fisher from the Dallas Fed said there is absolutely no chance of tapering this year at all because of the upcoming debt ceiling debate again in January. So that's great news for the stock market. But we have to look at some of the fundamentals of the market. Prices relative to what's going on in terms of earnings, corporate earnings, is getting deviated. Corporate earnings have been very weak this quarter, and this morning, United Health, IBM, Goldman Sachs, earnings were very weak, and that doesn't really bode well for a continued bull market. So it's really dependent at this moment that the liquidity from the Federal Reserve continues to come into the market.
But what else are you going to do with your money, Lance? So if the market maybe is kind of taking a temporary peak here, the interest rates are being held very low, like you said, by the stimulus coming from the Federal Reserve. What do you do with your money?
Well, look, you have to stay invested in the market right now. We're going to probably see this market rise higher through the end of the year because of the Fed stimulus. But my point is simply just, be careful, because as we get into this debt ceiling debate again in January, February, there's going to be a point here where we do see a reversion in the markets as these prices kind of return to the underlying fundamental realities of the market. So you want to be a little bit cautious and pay attention to your money. But right now, the market is biased to the upside. We're into the seasonally strong period of the year. So, it's okay to be invested. Just do so with an eye towards some risk management.
Hey, Lance, we only have about 10 seconds. Gold is up about $35, but you say sell.
Yes.
All right. You heard it here first.
Yeah, basically, gold's broken. Yeah.
All right. Well, G. Gordon Liddy still says to buy. So, all right. Thanks, Lance Roberts, founder of STA Wealth Management and Street Talk Live. Okay, thanks, Lance. Here's Melissa.
Thank you.
Too funny.